and welcome to our next panel, and making impact through money and why your investment matters. So thank you, Lisa, for this nice introduction. My name is Jasminka Enderle. I'm a sustainable finance expert and enthusiast. I work at the Cambridge Institute for Sustainability Leadership in the Center of Sustainable Finance, where I collaborate with banks and insurers and investors on creating a more sustainable financial system. It's an amazing work I really enjoy. And I'm also the host of a podcast, How Your Money Creates Impact, which will be launched next week. So follow me on LinkedIn for updates. But today, I'm having the great pleasure to talk to 4 phenomenal women about impact investing. And this is my favorite topic, especially in combination with women. We will talk about what impact actually is. So we all talk about impact, but what is this? How can it be created and measured? And what ways of investing and what kind of a mindset do the new investor community have? So welcome with me on the stage. 4 amazing women I get to know this week. I was completely blown off. So first of all, Gaia, who founded Finuprise, who will help you with finding sustainable companies, and Franziska with Unconventional Capital. She's founding entrepreneurs in Africa. Jaqueline, who is also co-founder of Carbon Equity, which is investing in climate tech startups. And Arijana, who's also a co-founder of Dart Labs Ventures. But before we start, I would like them to introduce themselves in more depth before we start the discussion on impact investing. So, Gaia, do you want to start?
Yes, of course. So I'm Gaia. I'm originally Italian and now living in Copenhagen in Denmark. I've been working with startups for the past 6 years and studied and worked across Europe and in Asia. And I think for me, what really motivates me in doing Finuprise and trying to change the financial world and making sustainable finance the new norm is that it's gonna have an impact and it's gonna change the world. And that's what drives me and motivates me in what I'm doing.
Thank you. Franziska, you want to go ahead?
Yeah, thanks, Jasminka.
I just gave you an Italian name, Francesca.
I know. I don't mind. Thank you, and thanks for putting together this great panel. I'm really honored to be with such a cool group of women. And so I'm Franziska. I'm based in Munich, and I founded Uncap together with my co-founder Isabel around 2 years ago. And basically, what we're doing is that we provide funding to entrepreneurs in sub-Saharan Africa. And so we do that in a way where we invest through a completely remote, automated, data-driven investment process to really make funding accessible to every entrepreneur. Because I think we're both, we're kind of like we're believers in equal opportunities, not equal outcomes. And I think it's, I don't need to say that opportunities to access funding are not equal, and especially they're very biased. And so we decided to start a company that makes funding accessible by reducing the cost to invest in companies, so enable investing in smaller companies, smaller tickets, but also make the whole process less biased. So the whole process analyzes the potential of the founders and doesn't look at how well are they able to pitch, are they able to write a glossy business plan or anything. We don't look at the gender, we don't look at the background. So like the only thing that really counts is like, do you have the skills to, or the potential to start a great company? Yeah.
Thank you, Franziska, very impressive. Arijana, do you want to go next?
Yes, sure. Hi, thanks also for having me. It's been an amazing 2 days, and I'm pretty sure this is the only conference ever that happened virtually where there was no mistakes. You guys are on schedule. Everything's working.
It's German. We're not Austrian organized.
Yeah, I mean, this has been really, really impressive. I was also part of another conference yesterday where right before the start, the whole system crashed and they ended up just live streaming on YouTube. So this is really a dream.
Women
So
in
yeah.
charge, Arijana.
So yeah, I'm Arijana. I'm the co-founder and co-CEO of Dart Labs and Dart Ventures. I started this together with my partner, Sophie. And Dart is an early stage deep tech incubator located in Zurich, where I'm at, and in San Francisco, where Sophie is at. We invest in European teams that are working on solutions for healthier humans and a healthier planet. And we support our startups with a year-long custom incubation program. So anything related to early stage company building, but with a focus on market validation and fundraising strategy. And besides Dart, I sit on a couple of startup boards, juries, and I lead an educational program at Habitat here in Zurich called Disruptive Technologies. I don't have many hobbies with all my engagements. I love plants. I have 2 children and 2 dogs, and that kind of fills the 24 hours the day gives.
Great, thank you, Arijana. And Jaqueline, do you want to go next?
Sure, I'm Jaqueline van Ende, currently founder of Carbon Equity. I have a bit of a hybrid background as an entrepreneur and as a VC investor. A few months ago, I was still a partner at the Dutch VC fund, but I have such a love for building companies that I decided to switch back to the entrepreneurial side. And currently we're building Carbon Equity, which is a tech platform for alternative climate investments. So we want to enable investments in all kinds of climate assets that are not listed, and particularly early stage climate technology through asset classes such as venture capital, private equity, and potentially also real estate. And we just started our journey. We started like a month ago and are starting to raise our first fundraising. So it's an exciting journey.
Great, thank you, Jaqueline. So we all cannot reach sustainability goals, sustainable development goals, without directing finances into the right direction. And just before we started this panel, Lisa concluded the other session with a key takeaway: let's make everything possible. And to make everything possible, we need money, and money is the vehicle for achieving a sustainable world for all of us. So, and we need a lot of additional investment in order to achieve that. So if we look at, for example, on the EU side, EU has its climate goals, and we just need 1 trillion per year invested until 2030 in Europe only to achieve only the climate goals. So you can just imagine how big this market will be, and is already, and it needs to take up. So I would like to start with my first question to Jaqueline. We were discussing about what are the opportunities for our generation, and what are these new investors, and what are they looking for?
Yeah, indeed. I read numbers of like $75 trillion that we need to invest in climate technology to get towards a properly low carbon world and avoid the 2 degrees warming. So indeed, we need quite a lot of cash. That's also what I find quite exciting about climate fintech, because money really makes the world go round. And the new investors, at least investors that we are targeting, are the millennial generation. We specifically target emerging affluent retail investors, which is people with a capital between 200K to several million. So the relatively smaller private investors. But it's definitely the millennial generation. I'm having loads of conversations with investors, and like the whole mindset between, say, the millennial generation and the boomer generation is entirely different. At times I call the boomer generation the lost generation, because, well, it's quite hopeless at times, unfortunately. Not all is lost, but many are lost. But the millennial generation, it's the older generation see impact investing or climate investing as a sacrifice. For them, there's some sort of inherent trade-off between returns and impact. And I think the younger generation has completely opposite point of view. The more impact, the more value you create. So therefore also the more financial value. And I think we don't need to explain to millennial investors that, you know, investing in a low carbon economy is the biggest opportunity of a generation, because we need to rebuild every single aspect of our fossil fuel dependent economy. So obviously, if you're able to build companies that offer equally good but like low carbon alternatives, you're going to create a hell of a lot of money. And there are so many great examples. You know, look at Oatly, look at Tesla, etc. The moment that you have an equally good alternative is when, you know, you win the market and you're building a multi-billion-dollar business.
Great, thank you. Yeah, it's also, I think, important in terms of, so on the one side, we have the opportunity of the climate investments. On the other side, we have a new investor type, kind of women who should,
yes.
should invest their money to climb the economic ladder, but also to be financially free, right?
Yeah.
Lots of women are now starting to look at where to invest their money. And of course, they start with the first asset class, which is the most prominent one, and these are shares. So, and I would like to direct my next question to Gaia. How can we support this new type of investors? What are you providing through your platform, and what are they looking for?
Yes, I think like building on what Jaqueline said, we can see how retail investors, not only the affluent ones, but every retail investor out there that is aged between 18 and 40 years old is interested in sustainability. And this number is like around 70% of this age group says that they do want to invest sustainably, against the 6% in older generations of investors. So they're definitely like, and women's are a big part of this group, because they're like coming they're coming into the space, they're learning how to invest, they've been educated, and so they're out there, like for example ETFs, where there are social and sustainability focuses, but these type of investors cares about the single companies that are out there. And that's why with Finuprise, we're building an app in which people can research information on the single companies. We have 8 playlists that span across social and environmental issues, and people can see which companies are having a positive impact in these areas. But not only we have this playlist, but we also offer a overview of what these companies have promised in the past, what they're doing right now, and what they're promising for the future. Because in this way, we take away a lot of the hours and hours of research that people have to go through if they want to invest according to their values. And that's gonna lower the barrier to investing for a lot of people, and especially women.
Do you have research, Gaia, like of your users, what percentage is women, or you're not live yet?
We're going to be live next week. However, we already have a wait list and beta testers, and around 60% of our the people that sign up are women.
Cool.
Mm-hmm. Gaia, how do you think investing in shares can change our world? That's a tricky one, I know, but I think it's a very important one to ask. How can investment in shares make change
Absolutely.
happen?
I think it's super interesting, because on a surface level, there is no direct link between investing in the capital markets and having an impact. But I think there is actually impact, and it kind of develops on 2 areas. And the first one is the fact that retail investors are becoming more and more powerful. We have seen it last year when they managed to move a stock price for the first time, and this year even more with what has happened in the past months. And we need to build a system to encourage and facilitate retail investors' engagement, because companies care about their shareholders. And if there is enough pressure, they do change their behaviors. So if at Finuprise, what we're doing is that not only we want to allow people to invest through our platform, but we also want to facilitate and encourage participating in shareholder meetings and voting with with money. And I think this is one first aspect of why investing in shares is impactful. The other aspect is the fact that, as we mentioned before, women invest 40% less than men. In the US, Black, Indigenous, and people of color invest 50% less than their white counterparts at the same level of education. So there is an issue of like high barriers to entry to investing for retail investors, and by having an app, by making lowering the time that it takes to invest, by making it easier, we are allowing people that traditionally haven't had a voice to actually have a voice also in the stock market. And that's also why our motto is money talks, so let's be loud, because that's exactly what we want to do.
Great, thank you. I think one important topic I would like to touch upon in this panel, which is very, very close to my heart, is to talk about how we actually see impact and how we define impact. What is impact? Because it makes the impression that the impact is everywhere and it's very easy to create impact. But I'm not sure if this is true. So Arijana, how would you define impact?
Yeah, that's a really good question, and I'm not sure I'll ever have like a final definite answer to it. In fact, in the beginning, I really didn't even want to use the term impact investing publicly. Even up until today, nowhere on our website do we speak about impact investing. Nonetheless, everything we support, we're seeking to have a positive long-term impact, because why do it if not, right? And for some time we struggled how front and center that word has to be in our thesis. And today, I think for us at DART, we translate it into investing in solutions that will have a positive impact on our health, so the health of humans, as well as the health of our planet. And we don't have, I'd say, 100% clarity of the definition still, to be frank. We're trying a more holistic approach, so not only looking at the intended impact of the startup, but also how are they going to achieve it. So for example, ethics plays a really big role in that lens, things like data diversity. Just to give a simple example, if there's a startup working on emotion detection to help neurodivergent people understand human emotion, right? The idea in itself is really meant to have a positive social impact, right? Helping people who struggle recognize human emotion figure that part out. But how are those algorithms constructed? Can it read the emotion of my dark-skinned child the same way as it can the emotion on my white face, right? And I think where we're struggling is how to integrate these aspects of impact, sustainability, ethics, and on a communicative way. Like when we're looking at the startups, it's not so hard for us to say, yeah, that fits or this doesn't fit, but how do we communicate to the outside what we mean by that? And that's still a little bit of a struggle for us.
Can I ask you something?
Please.
Another factor that I imagine is really complicated is that some things have a positive impact, but with poor side effects. Take, for example, batteries or electric cars, right? So electric cars are great. The manufacturing, especially the disposal of batteries, is like can have massive detrimental impact. Have you created a framework, or what are your thoughts on weighing different priorities or advantages and disadvantages?
That is exactly the struggle. That's exactly what I meant by the struggle that we have internally. We have not come up with a systematic approach to that. I mean, in the beginning, at some point, just on our own investment proposals, so we have a small investment committee that makes the decisions, and the documents we prepare for them, we now started just taking into SGEs, because we realized, hey, all of our startups are hitting multiple of those, and let's start looking at where do those impacts lie, but we have not gotten to a systematic approach or rating especially of where things might be, where something that it has a positive intention has negative side effects. That's an extremely good point.
Thank you. Yeah, thank you for your honesty here. I think it's very important to unpack this truth a bit, that we have a lot of different approaches how to define impact, and some have a lower barrier and some have more sophisticated barriers to impact and to commit to impact. From my experience with working with banks and investors, I found that going into working on the ground, like traditionally the development financial institutions, development banks work, is where impact is created. So it's very on the ground in emerging markets, in a very, very small scale projects. So it's not in the big green bonds out there, and it's also very, very hard to participate in all of these as a private investor. Now, but we will talk about this. I would like to ask Franziska, how would you define and measure impact? Because you have these small scale projects. How are you doing this?
I think we actually we went through the same journey than Arijana. So when we started, we didn't really want to use the term impact at all. And so, I mean, we're a company that was founded because we want to solve a problem. And we decided that one problem that's definitely worth solving is kind of like that we have this region, this tiny region, Africa, that has kind of like 60% of people are below the age of 25. The median age is 19. So you have a region that has like an insane potential of young, bright, more and more well-educated people. But at the same time, there are almost no jobs. I mean, there are some countries where kind of like unemployment isn't even that low, but then you're in working unemployment, meaning that you earn less than $3 per day. You have a master's, but you work in a call center. Almost, I think, every second or so student then decides to start a company. And they usually start companies around problems that they experienced in their upbringing. And they usually also create services or products where they see there's a need for that. But most of these companies lack access to funding. So kind of like, I mean, numbers are like, doesn't tell you a lot, but like 89% or 98% of companies don't have access to funding. So we decided to address that problem. And so we said our impact actually is access to funding. And we want to target companies that are able to scale, because it means they can create jobs for others as well. When we then kicked off the company and we start fundraising, many investors ask us, so how do you measure the impact of your investees? And we were like, well, first of all, we said like, we don't even want to measure their impact. What we're measuring is like, how many companies do we give access to funding? Are we unbiased enough in our approach? And do they create jobs? We don't care if they are social entrepreneurs. We don't care if they use organic cleaning products. Like, as long as they, like, I think when we talk about impact, we need to think about like, where do I really move the needle here? And I think like moving the needle there is creating opportunities for people that deserve them. It's not kind of like, we're starting from, I think, a different level than when we talk about impact in Germany. Nevertheless, also we're dependent on external funding. So we decided to at least start measuring impact, but leave the, how do you measure your impact from the entrepreneurs we invested, leave it up to them. So it's up to them what they think, where they can move the needle. It's up to them to decide how they want to measure the impact. We only track it, and we give them the tools to do that. And I think, interesting enough, you realize that most entrepreneurs start companies, as said before, addressing problems that they see. So they're kind of like impact entrepreneurs by nature, but they would never call themselves that. They just create companies that make sense.
Great, thank you. I think in the impact investing world, there's also a term which is floating around a lot. I would like just to mention it here, and it's the term ESG, environmental, social, and governance. And you are, Franziska, tackling a lot of this S in the ESG, which is very, very hard to tackle. Before Corona, we had almost all almost all activities we saw in the E, so in the environmental side, especially on the climate side. But now S is kind of becoming very, very prominent. So you are very much only on the S side, right?
So, I mean, we're directing our impact on the S side. So it's kind of like creating opportunities, but the impact then our entrepreneurs create, they could be E, they could be S, they could be G. Like, we don't care. Like, it's up to them. But it's... Yeah.
Did you measure impact, for example, in jobs created through the companies that you fund? Yeah. Okay.
Yeah, and this is a very exciting KPI, because job creation is also used by the development banks as a KPI to be measured. There is another term in impact investing, and this is the term of additionality. And I would like to unpack this a bit as well. Jaqueline, do you want to say something around how you see it and define additionality and how important that is in this whole impact investment topic? And what next steps do you see to understand more how impact is framed?
Yeah, additionality, technically, I think it means it asks the question, would the investment have happened without you? And so the more likely the investment would have happened without you, the lower the additionality. That's where our thesis is that typically public stock investing, because it is so accessible and because it is so liquid, the additionality is lower than, say, for example, in private investing. But if you're going to be really strict, like anything that is commercially viable has little additionality, because there will be economically motivated investors who want to invest in that particular opportunity. So the biggest impact is truly in donations, actually, or that's where the biggest additionality is. But yeah, typically the more complex and less financially attractive, the more additionality.
Yeah, thank you for saying this out loud, because it's so why I'm so excited about this panel today is that you are, through your work, are seeking these additional, so new investments would not have happened without you. So the question is now, when you have this bunch of these investments, you as a company, as carbon equity or as a dart lab, how we in the audience, how can we participate in this, and how can we open up the capital markets a bit and democratize this, and to be able for us as a private investor to be able to have an impact in our portfolios? Because if an ETF is not creating that impact, or a share is not creating that impact, I would like to have some kind of impact in my portfolio. So how can we participate in your ventures, to also create some impact?
Well, the way that we're tackling that at Carbon Equity is that we say there are certain private asset classes, such as venture capital and private equity, that can actually move the needle on climate change. So for example, in the case of venture capital, it's early stage technology investments, where typically it's rather high risk, and therefore it's like this closed asset class. In the case of private equity, you could actually, take majority ownership of a company and then implement sustainability measures to steer an existing company on the right path. But those are asset classes that are not available to normal people like us, or even slightly richer people than us. So those typically are investments that, first of all, you need to have like a minimum ticket of €1 million to participate, and you need to qualify with all kinds of regulatory requirements. And so what we want to do with Carbon Equity is obtain a full regulatory license, which allows us to scale below the qualified investor limit. And in the Netherlands, that's like €100,000. I think in Switzerland, that's €250,000. And as a result, we will be able to offer much smaller tickets. So say when I can offer a 10K ticket, then there is so many more people who can participate. And our theory of additionality is that we can grow the capital base by getting way more capital from private investors into the market by making it more accessible, by democratizing it, if you will. And so that's our vision on additionality.
Great, that's my vision too. Thank you.
Oh.
Completely agree. Arijana, what are your ways? How could we participate in your venture?
Yeah, as Jaqueline mentioned, venture capital is kind of a closed asset class requiring quite some liquidity. Actually, it's more than 250,000 in Switzerland. It's a minimum of 500,000 liquid assets if you have knowledge in the venture capital space. If not, it's 2 million of liquid assets. So the hurdle is really, really high. How can they participate? They can join Dark Labs, of course. The way we've done it is we've built a small investment club. We're limited to 20 people per club, but this allows us to not be regulated under the collective investment scheme, and to also allow people with smaller tickets, the ones that are not so super wealthy, that they can do a 1 million minimum size. But what really matters to us at Dart, there is no impact without involvement. So all of our investors are entrepreneurs themselves. Most of them have been doing a little bit of direct investing, because if you don't have the million to go into a big fund, you can always invest directly into a startup. But then it's up to you, the investor, to find the startups, do the due diligence, vet the deals, and take care of them. Or you can go to an angel club. But I, so far, at least in Switzerland, don't know of any clubs who also have an impact focus. So there's some funds. We have one that was just recently launched, Übermorgen, which is I think their goal is a 2% reduction of CO2. But other than that, in the angel space, there is not, there are no players that I'm aware of that do the dirty work on the impact side of it. The dirty work, I mean the scouting, the vetting, the due diligence, and the taking care of the day-to-day, so that our investors can just get involved then when they can really create a disproportionate impact.
That's very important what you just said, Arijana, is that the dirty work, because dirty work is not done by the big guys, by big women.
Right.
In the banks and the insurer space, the one with huge balance sheets, because they're just interested on the really, really big tickets, because doing the dirt work and having found all of these small promising future solutions and possible corporations which will possibly take off, is a very, very hard work and expensive work, where it's very, the banks are stepping into very, very late stage. So the democratization of the capital markets is not a straightforward one, and this is a very, very important thing. So thank you for raising that. Franziska, how can we participate in your great company?
Thank you. I love this discussion around democratization, because this is actually something that we're now thinking about, because I mean, we're democratizing access to capital for entrepreneurs in Africa. But so far, and I mean, we're kind of like, we're in the same boat and we're not. I mean, we're also like an early stage startup, like our entrepreneurs, but obviously in a very, very privileged setting. And so our investors so far are wealthy individuals, foundations, etc. But I think it would be really beautiful if at some point we come full circle, right? Where we're basically democratizing investing in us while democratizing access to funding as well. So we're also just looking at how can we, like, what's the regulatory road kind of like to at some point be able to, for example, issue a bond, where basically kind of like we're issuing a bond, could be listed at a stock exchange in Germany, and then private investors can just buy that bond and kind of like that, therefore make it much more accessible to them. And we see quite a lot of interest in that, right? So we have many, I think it's friends, it's my parents, it's kind of like my boyfriend's mom, like there's so many people who ask like, how can I invest in those entrepreneurs in Africa? Like I really like the idea and I want to make something meaningful with my money. So I do think there's some work to do there, and we all probably need to be creative to kind of like open it up. But it's coming.
Yeah.
for sure. Yeah.
We're all here, so it's coming.
Yeah.
Let's share some
so
thoughts
much.
on that, Franziska. We're doing a lot of learning in that sense.
Yeah, I already wrote down that I need to contact you.
It's so amazing. I was given a sign that we are running out of time. It was a great pleasure to talking to you all. I'm feeling that a new asset class is emerging, which is amazing for all of the investors outside here and also in the audience. And I just want to summarize a bit the key takeaways for you all. I hope you know that the new generation has a completely new mindset how they want to invest, and they want to create impact. And impact does not mean that it's easy to achieve. It is hard. It's hard work, but we will find a new asset class for you. We will work for it. So you have here a few examples who are working on it. And it does not mean that you need to sacrifice returns. It does just mean to invest in the transition of our economy to a net zero one by 2050 for all of us, that all of our children can survive. I think this is the only way forward in the investment community, to have investments with impact and to create a sustainable world for all of us.